Joining me now is Peter Krauth. He's the author of Great Silver Bull, also the editor of Silver Stock Investor, and a new free newsletter, Silver Advisor. How about that? How are you? Good to see you.
It's great being here. Thanks very much.
So let's just talk generally. Let's look back a little bit to silver. So last time we spoke, literally a year ago, it was trading around, say, $22 an ounce US. Had a nice run this year, or last year in 24, and it's sitting around 31. So what are your thoughts on that? What was driving it?
So I think that the market finally clued in that silver is really in tight supply. If you account for 2024 being a silver deficit year again, that will be 4 years in a row. And if you take the average, we're somewhere around 20% annual deficit, which is really tremendous. So if you add up the last 4 years, you're at about 800 million ounces almost of deficit, which is 80% of 1 year's supply of silver. So that's really quite significant. I think that the market clued in. They started to see that, and I actually talked about this back in, I think it was March of last year, that looking for some explanations as to if the silver price had really yet to move, and we were facing these deficits, where was the market getting the silver? And if you look at inventories in the large exchanges like the LBMA, the COMEX, and the Shanghai, starting in early 2021, those supplies really dramatically started to drop. And so I think that that's where a lot of the industrial, especially the industrial consumers, were going, getting their silver. You even saw silver ETFs drain in terms of ounces held. And so I think the market started to clue in that the market really was quite tight. And so from February 2022, I think late February 2024 last year, silver was $22. It ran very quickly to low 30s. I think that was in May. And then by October, it had continued to run and went all the way to 35 and has dialed back a little bit, but it was a strong year. So in about 7 months, it did about 40%.
What do you make of the industrial demand, and especially the newer type of demand for the last few years, solar and other areas? Because the last figure I saw, industrial demand is about 60% of silver demand.
That's right. So about 5 years ago, it was about 50%. So we had an almost equally balanced market between industrial and investment demand, but that really has shifted. And I think that there's been a real underestimation of the demand of silver that would come from solar. In fact, I saw some research that looked back to 2010, and if you look at the forecasts, the 5-year forecasts, every year from 2010 onward, we had under forecast the silver demand from solar by about 3 times.
Is that right?
It's just been tremendous. I think it really surprised everyone. And that really is what I call the 800-pound gorilla in the silver market. Solar is now 20% of all silver demand, so that's really quite impressive. And there's some other technological developments that are really leading to even perhaps more silver demand as well.
Right, and we respect the people who do these forecasts, but it's so difficult to look out 5 years, and it just shows you that we shouldn't rely on those. Take them with a grain of salt. All right, gold-silver ratio is mid-80s, 88, so that's very high. Why do you think that is right now? I mean, we know gold is elevated, but why is there such a lag there?
Well, still, silver is very cheap. I mean, it's the only metal that's still below its 1980 high of $50. If you look at all of the base metals, the precious metals, the platinum group metals, they're all well above those highs. And I think it just speaks to the volatility of the silver market. It really ebbs and flows, and money moves in quickly, moves out quickly. It's a small market, it's volatile. I just think that gold is king in many ways, continues to be, but we also know that silver outperforms gold in bull markets, and I don't think that's going to be any different this time around. I think we're several years away still from the ultimate peak in this bull market. I think the context of economically how precious metals are likely to act is probably going to be different in this cycle from how it has been, even compared to the 1970s, just because the financial system is so broken. But silver has a long way to go, admittedly, and I think that it's just kind of how it behaves. It's volatile. It needs to catch up. We've seen that start to happen last year. I think that this year that's going to continue. And you know, the industrial side tends to be what I call providing a rising floor under the silver price, and it's a lot more predictable in terms of its demand. And I think that'll help to see. I think 30 is going to become the new floor, and we're going to be pretty quickly probably back to 35. But it's the investment demand that ebbs and flows, and when it flows and it comes back in a big way, I think an interesting point too is because industrial demand, as you alluded to earlier, has now gone from about 50 to almost 60%. If you think about it, that leaves less silver every year available for investment. So you have to ask yourself, when the investment demand really comes back in a big way and there's less silver available for it, what's it going to do? Well, odds are it's going to push the silver price, and we're going to really get some spikes again. So that's kind of the hot money. Be ready for it if you're in the market. Maybe be ready to take some profits, but even if it makes silver run to $40 or $50, I think that's going to be small ultimately compared to the final peak.
Which we've talked about before, and whenever that lot of money starts chasing that small silver market, and we've seen it many times, it can really explode. Peter, you've got a couple of ideas for us, maybe a brief snapshot on each. Kootenay Silver.
Yeah, so Kootenay Silver has several projects. They're all in Mexico. They have already across these existing projects, more advanced projects, about 270 million ounces of silver equivalent, which is quite something for a junior. And that doesn't even include what I consider their most interesting and most promising project called Columba. And so Columba is a collapsed caldera. And without getting into too many details, there's been some mining there historically. They're hitting some fantastic wide intercepts of very high grades of silver. We're talking, multiple thousands of percent over some smaller intercepts, but over some wider intercepts, even some 400 or 500 grams per ton silver with some gold and some other metals, but very promising. And I think that there's putting a lot of effort into that. I think that's really an interesting and attractive reason to own Kootenay Silver. A lot of promise there.
Okay, and then Cerro de Pasco trades on the CSE. Not a household name, not really a name a lot of investors may know. I hadn't heard of it. So tell us about this.
So Cerro de Pasco has the rights to a tailings facility, and this is a really interesting mine because it goes back something like 500 years. It's one of the only mines, if not the only mine, that has been in continuous production in some form since its inception. In fact, if you look at the early 1900s, J.P. Morgan himself was involved in this project. He actually brought the Cerro de Pasco mine onto the New York Stock Exchange, and it was a public company, the mine itself. So if you fast forward to today, it's a huge open pit. That's what it has become over the last decades. There's a good-sized city that actually surrounds the pit. The odds of it being mined, that pit being mined any further, are unlikely, just because the town actually surrounds it. But what is left over is a massive stockpile of metal that still today has, because of technology, has a lot of recoverable metal, and it's considered one of, if not the largest above ground stockpiles of metal anywhere. So we're talking about, in silver equivalents, about 400 million ounces of silver. So they have the rights to this. They're actually drilling it off now, getting wide intercepts of respectable grades of silver. They have gold, silver, copper, lead, zinc. But what they're also finding is gallium and indium. And these are critical metals. China just banned the export of some of these critical metals. So now the West is scrambling, looking for it. They could be a really attractive supply of some of these metals. And just for your viewers, interestingly enough, gallium is actually now at a higher price than silver per ounce. And they're getting higher grades even than they are of silver in this. So if you add up just the gold and the silver, you're at about 38 or 40% of the value of the metal in precious metals. And then you add in the base and the critical metals, really a very, very interesting story to follow.
All right, so Kootenay Silver, Cerro de Pasco, a couple of ideas there. We'll wrap it up there, Peter. Always good to see you.
Thanks very much. My pleasure.
Okay, Peter Krauth, author of Great Silver Bowl. He's also the editor of a couple of newsletters, Silver Stock Investor, and a fairly new one called Silver Advisor, and that one is free. So our thanks to Peter. Go get those newsletters.